Welcome back, ladies and gents. Welcome back. You know what time of day it is, 7:30 a.m. Eastern Time. Has it been 23 hours and 30 minutes already? It has. We're welcome back here for a Tuesday edition of our Crude Oil Squawk. We're going from the screens to the floor this morning. My name is Joseph James. Welcome aboard. Happy Tuesday to you guys. I'm a technical analyst. I run a live trade room Monday through Friday at 8 a.m. over at SchoolOfTrade.com. Come out and see me any day, Monday through Friday. And again, I'm a lonely old technical analyst. I'm a day trader in my home office. I've got some computer screens. I've got real-time data. And I've got a pretty solid plan of attack to give you guys a top-down approach this morning, which means I'm going to start with some weeklies, some dailies, and we're going to drill it all the way down to some minute charts and see what's been happening overnight coming out of that London session. I'm trading the U.S. morning session this morning, so I'm going to be analyzing what happened previously, and that will be the London trading session. And of course, if I analyze what happened overnight, if I analyze what happened coming out of Asia, going through London, then I can anticipate direction at the open based on market personality and based on trading ranges. I can look for those high percentage trading opportunities starting at 8 a.m. Eastern Time. So my job is pretty simple. Find the direction of the morning, see what's been happening overnight, plan the entry locations, and then all I've got to do is simply wait for the patterns set up around those high percentage opportunity locations. So we're going to define some of those high percentage locations in just a few moments. Once I'm done with you, I'm going to toss you all the way across the country from Los Angeles all the way to New York City. We'll jump in and we'll see what's happening with Marty Errico from Traders Audio. Don't forget to go join Marty and his partner Jeffrey at Traders Audio Monday through Friday at 8:50 a.m. Eastern Time. That's 8:50 a.m. Eastern Time. And they do a great broadcast from the opening bell to the closing bell on the NYMEX exchange for both crude oil and natural gas futures. Today, Marty's going to be giving us some very useful pit analysis, meaning that he's going to be talking about intermarket direction, divergence, internals, some of the more important option prices, and as we always talk about, the very important pit session trading levels. Guys and gals, don't forget, there's a big difference out there between electronic trading hours and regular trading hours. Do you know the difference? Shoot me an email. I'll be happy to give you more information about it, but just be aware that Marty's guys in the pit will be using the RTH, the regular trading hours, and they'll have a little bit different trading levels than the rest of us will. So many of us don't know that when we first get started, that the pit session levels are different than the electronic or the screen session levels. We'll talk more about that with Marty in just a few moments. You've heard enough from me yapping my gums here this morning. Let's jump right into some charts. Let's get going. First thing I'm going to do is I'm going to start with the dollar index. And of course, this dollar index this morning, the first thing we're going to look at being the dollar. Why do we look at the dollar? Because the dollar is the dog that wags the tail, right? The tail being the markets, the dollar being the dog. We know that the dollar index, when it's moving well, other markets move well. The dollar index, when it's sitting here and stagnant and range-bound, we know that's going to be the case for other markets as well. In my humble opinion, the dollar index is one of the most effective aggregators of information. In other words, when I see news releases come out today or tomorrow or the following day, I will use the dollar index to tell me how to react to that news, right? Think about it. If the dollar moves higher off of news, we can assume what the reaction to that news was. So think of the dollar as a nice aggregator or a place that will tell you exactly what the reaction to news is or what the tone of the risk sentiment is today. A strong dollar oftentimes means weak gold, weak euro, strong crude. So we know that this dollar index is a healthy and effective way to start our day each morning. What are we seeing in the dollar right now? This is a dollar daily chart. And on this daily chart, what are we seeing? Well, first of all, we can see a big fat sell zone up around this 84,505. We also can see we had some double bottom price structures down here, and these double bottoms, of course, now have resulted in a double bottom sell zone overhead. So we have two, well, ultimately three, if you draw this trend line from high to high. Notice how we use just the wicks, right? We canceled off the wicks at those highs. So we got trend line here. We've got sell zone here. We've got double bottom resistance zone there as well. You can see those are three levels of resistance that we should see this dollar collapse and head lower. This, of course, is a daily chart of the dollar, which means, remember, each candlestick is 1 day of trading range. You can see that we have made its move off those highs. Will that dollar continue to go lower this morning? If the dollar goes lower this morning, you've got the euro right now and the gold, both of which are right at the perfect spots here to be buying. We're talking about crude oil for this call this morning, so I'll stick to crude. If the dollar falls, we may see crude rise or fall. Why? Why is that? Well, because if the dollar falls off these highs based on concerns over a recovery or concerns over consumption in the market, retail sales, consumer confidence, new homes, things like that, if the dollar is falling because of confidence, well, then we have to remember that crude oil will most always fall with lack of demand. So look for the positive correlation between the dollar and crude oil, right? We've seen that happen most often lately. There is that inherent negative correlation. When the dollar becomes weaker, things become more expensive, and crude oil will, of course, tend to rise. So we have to wait and see if this dollar correlation will apply to crude, but we know for a fact if the dollar falls off these highs, something is going to happen, right? That's the key. Something's going to occur this morning. So keep an eye on that dollar index. Now, we don't have much news this morning. We've only got some minor news reports. That was posted on the blog this morning earlier today, so check out the blog for today's news. You'll see without major news this morning, this dollar may not get a chance to get going. Now, you can see if you kind of zoom in on this dollar a little bit closer, you can see the range we're trading in. We're right inside of this kind of narrow range here. You'll notice as we look at this dollar, we've got the 84.930, 84.105, right? We're just kind of chopping around in the middle of this range here. Now, you'll see this chop and slop here is also resulting in chop and slop on everything else right now. Let's now move over to crude oil. Now that we've got the dollar index under control, let's now move to crude. Looking at the black gold here this morning, weekly chart on crude. Now, the weekly chart does a great job at illustrating why we should see, but we may not, who knows, right? We're trading crude oil for crying out loud. We should see lower prices. You can see crude oil here this morning coming off the highs of a weekly price wedge. You've got this trend line here, and that, of course, is providing us with lots of weekly resistance. This leads me to believe that we should see prices dip here before we try to keep going higher. Remember, last week we projected 104, right, would be a reasonable spot for us to head to in the next few weeks. And, of course, you can see this trend line is going to try to interrupt the party going higher. So we do know that we should see prices falling lower here this week on crude oil. So the weekly chart does a good job at setting the overall stage. But as we zoom in, I'm going to skip over a daily chart. The daily chart doesn't give us a lot more. It doesn't give us much more information than the weekly chart. And here on the 4-hour chart of crude this morning, you can see the following. We can see the big bullish channel. And, of course, the big bullish channel tells us that buying pullbacks at major support will continue to be the high percentage trades. Again, I repeat that. Bull channel says buying pullbacks, high percentage trades, but we got to wait for price to pull back first. As you can see what's happening right now, you look at the short term here on crude oil, and what do we see? We can see a wedging effect here. We can see price narrowing, consolidation, higher lows, lower highs. We've got some major support here at 102.30, 198, and of course 98.40. Not much has changed between yesterday and today, which does not happen very often on this type of market. You'd really have to be patient to see 2-3 days in a row where you don't update this 4-hour chart. I haven't touched this 4-hour chart, right, since this time yesterday morning. So it doesn't happen very often we see crude oil sitting here. That tells me, since we're sitting here on crude right now, let's move forward from a 240-minute now to a 60-minute. As we move forward here on crude to a 60-minute, we see a lot more detail. Again, we can see this narrowing of price action. We can see these higher lows and lower highs. We can see the wedging, the consolidation. That tells us that we have to treat this as two-sided trading this morning. We don't know where the dollar is going the rest of the day today, right? We don't have a crystal ball. All we can use is the market's personality that we're seeing right now. So what I'm seeing here is I'm seeing a lack of news yesterday, a lack of news today. I'm seeing a lack of direction from the dollar. I'm seeing a lack of direction here on crude oil. From what I can see, we need to see something else. We need something to come in here this morning that's going to give these markets a push. Now, with that 60-minute chart in mind, with that narrowing wedge pattern in mind, let's now move down to a 5-minute chart. And the 5-minute chart is going to give us the price levels now that we're going to use to make our money today. So I started with a weekly chart, went all the way to an hourly, down to a minute, and here we are in a 5-minute chart. This isn't even my fastest time frame today, but this is going to be what I'm going to use to find those very important price levels. Now, one thing's for sure, very narrow range coming in overnight. You can see how narrow that range is. Guys, we usually see about a $1 range coming out overnight. We're seeing a 50-cent range right now. It literally took 1 hour to go from top to bottom, and that's all she wrote. Now we've just been hanging out inside of this lower half, right, of the overnight trading range. So a 50-cent trading range overnight is a very narrow range, as if we didn't see that coming a mile away, right? As if we didn't see that coming. We saw that on the dailies, the weeklies, right, the hourly charts. So we shouldn't be too surprised at seeing a narrow range. Okay, Joe, so now we know what we got. Now we know the cards that we've been dealt. Now it's time to play our hand, right? We got a bunch of lemons. It's time to make some lemonade. How do we profit from this? The two-sided range-bound trading, the market personality says I need to buy the lows, sell the highs, and avoid the middles, right? As Mama always said, Joe, don't fiddle with that middle, and that's exactly what we don't want to do today. We do not want to play around with the middle of the trading range here. So what I'm going to be focused on doing this morning is I'm going to be focused on buying the support zone below me, buying the price reversal zone below me, selling the price reversal zone above me. If you did that with me yesterday morning, you got 3 great trades. Remember, look back at your charts from yesterday. We bought the lows yesterday, sold the highs yesterday, bought the lows yesterday, right? And around we go. We will plan on the same thing again this morning. Very effective strategy yesterday for crude oil. We'll look at the same thing again this morning. So again, I'm buying the reversal zone below me. I'm selling the reversal zone above me. Then let's talk about what happens as price rises. Remember, guys, price can move 3 different ways. Price can move sideways. If it moves sideways, I'm sitting on hands. Okay, so price can move sideways. If it moves sideways, I'm sitting on hands. I'm buying lows. I'm selling highs. If price wants to move sideways, I'm ready for it. But if price wants to go higher, let's take a look at the levels we have to work with overhead. First of all, we get the price reversal zone from 103.32 to 103.45. As soon as I get above that 103.45, I'm looking to buy pullbacks. So I'm getting long above 103.45. I will use 103.62. 103.68 is the previous week's high, and 103.80, those make for great profit targets. An excellent runner target today would be the 104. 104.10, an excellent runner target there. So we can see here overhead, as we go higher, I'm selling the reversal zone first. If I don't get it or if it fails, I'm then buying pullbacks above 103.45. I will keep a close eye on that previous week's high. As you can imagine, the previous week's high is going to be a big psychological level. So keep that in mind. That will be a great profit target for you. And then very important, look at how easy this one is. We have the 103.80 and the previous high of day, folks. That's the previous high of day. That means that's yesterday's high. That's Monday's high. Okay, so Monday's high of day, another psychological level. If we push up to Monday's highs and then collapse, we call that the inside-out setup in our live trade room. If we push through Monday's highs and we keep on going, we know that we are very, very bullish and we should be buying pullbacks. And again, that final target up here at 104.10, that's right below the 104.12. That was the high, right, from Sunday, from late Friday. It was outside of the pit session levels. So, of course, many of us will discount that 104. That's resistance overhead. Now look at support below. As we go lower, same thing. As price moves lower, I'm going to initially buy the reversal zone. As we get below the 102.71, I'm then looking to get short, selling retracements, using profit targets here at 102.54, 102.36. I've got the previous low of day, just like the previous high of day. That also is a big psychological level. think of that previous high of day and that previous low of day as an electric fence, right? You go touch that electric fence and you're going to get shocked, right? But as many times we want to test, the first time we test that previous high of day, the first time we test that previous low of day, those will be the most important times to look for it. I've got 102.06. Again, excellent bounce area here. Excellent reversal spot there around that previous low of day. 102.36 and 102.54. As you can see, we can easily contain the entire range from yesterday on this chart without even missing a beat. Very easy to see the entire range. I'm going to draw some trend lines in here, right, to illustrate the price wedge. And you can see here we have this very narrowing price range here as we speak. So wait to buy those lows, wait to sell those highs, wait for some market personality. We don't have a lot of news today. We have very little news today. And I'm anxious to see what Marty's seeing. You know, I'm just a lonely old day trader here on my end with some screens and some real-time data. But, you know, I'll tell you, we got Marty Errico hanging out on the trading floor right now at the NYMEX. He's seeing the big board. He's talking to all the other locals in the pit right now. Marty, what are you seeing? Are you seeing this two-sided trading? And what's going to get you excited today?
Well, good morning to you, JJ. Right, so, I mean, I've been seeing a little bit of the same thing. I kind of look at this screen today and I say, damn, this looks just like yesterday. Spitting image of a lot of levels that we were sitting at yesterday. So almost kind of taking that same approach from yesterday's game plan of attack to today's game plan of attack, right? So we've been continuing just to watch very type of sideways activity. Again, we're going to be, let me just show you guys a couple things here before we kind of just get to it here. So let me just make sure I'm showing the right charts. All right, so real quickly, we look at the fact that now we rallied, right? All these new levels of support that we have now, right? So now we've been trading and we've been holding levels above the 100, right? We've been staying above 102, 103 now, right? So we have all these new levels of support that we want to kind of keep in mind. Those are good buying opportunities. Again, we have ultimately a few levels that we breached from the overnight session, right? We got 102.70, 102.13, that's from yesterday, right? Then we have 101.46, that's the high from, the low from Friday's trade. And then we have all these other levels right down here. So to me, I think these are all good buying opportunities on the way up. Then above, we have these levels of resistance that now, since we're in such a little tight range. So we'll get to those support resistance levels. We'll get to all our, buying zones and selling zones in a little bit. But again, I just kind of want to mention how we're just so similar to yesterday's trading. So I look at the charts and I'm taking a look at the big board here this morning. I'm taking a look at Crude, RBOB, crude heating oil products. They're all trading a bit lower to sideways this morning, but really kind of sitting tight in the range that we've been in here for now the last 3 days, you can call it, right? So we take a look at crude right now. We are currently trading just around the 103 even. RBOB trades at 288.55. Heating oil at 279, 289, 279. 85. So again, that's 279.85, 287.85. So we have kind of a little bit of a shifting price here in the heating oil. Very volatile this morning as well, high volatility. Alrighty, so this morning I'm looking at open interest, 220,175, as we are watching now open interest kind of just falling just a bit in the August contract. Keep in mind, it's the 5th business day of the month. So on the 5th business day of each month, that's when we start to see the roll in the pit. So right now we're starting to see a little bit of activity start to kind of creep out of this August and kind of creep into the September contract. So we are starting to watch roll in the pit. That's when all these pit traders make their money. So again, we're watching now a little bit of roll activity. We're watching a little bit of activity here as well in the Augie and the SEP. Again, prices are very similar in Augie and SEP. So you have to look at that. There's a very, very 9-cent spread between bid-ask and between basically prices between our spreads. So that's very tight and that is bullish. So remember, when we talk about the spreads in contango, that will make prices trade higher. When they're in backwardation, that's a very bearish factor. So once again, that Brent WTI spread obviously, and now the Brent, the crude spread, the calendar spreads from the Augie to SEP, very tight, very thin, very close to each other. And again, that roll activity that's happening in the pit is going to be a big factor in how we move. So we have JOLTS today. That's one news that may move the market. JOLTS is at 10 a.m. this morning. second move of the market. But let's get down to what we do every day. So first, we look at our multiple market divergence, as I mentioned, a little bit lower to sideways. Open interest kind of showing that the shorts are getting squeezed out at the moment, kind of showing a little bit of higher prices. That's why the mentality is more like buy that resistance and buy the dips, sell the rallies. That's the type of sentiment that we have down here on the trading floor. Volatility this morning, holding steady where it was yesterday. I got 26% or so, but we're going to now just move over to our Brent crude, holding levels around 107. That's where we were yesterday. That's where we were yesterday morning, and that's where we continue to trade today. That Brent is currently just kind of holding levels around that 107 level. Brent WTI spread, very tight this morning as well. I got about 412 on the spread. Right now, it's kind of it was a bearish factor earlier, but now it's kind of starting to turn around to a little bit of a bullish factor. So, ladies and gentlemen, I might want to be changing that arrow and considering that a little bit of a bullish factor now that we're watching that spread turn around. Calendar spreads, as I mentioned, they're very tight and they're bullish. So I'm getting bullish sentiment from all of our spreads. So they're all starting to turn around and give us somewhat of a bullish sentiment. So dollar index this morning, ladies and gentlemen, right now, the dollar has been fading off of that 84.90 level that 84.93 level. Remember 84.93, that was the high that we made yesterday morning, and now we're starting to fade off that high, and now we're trading around 84.50. So overall, the dollar kind of is still a little bit higher on a weekly perspective, but starting to fade off that high. Again, all of our other currency differentials are pointing for crude to start trading a little bit of sideways until we get anything going. So, all right, those are our multiple market divergence. We're going to talk about levels in just a second. I just kind of want to just quickly remind you guys that right now, big shift in volatility, and what we want to do is we really want to kind of use volatility as our friend here. So when vol is going to be rising, right, or sitting really around this level, this is going to be bullish. If vol starts to fall and trade around maybe 22, 23%, that's going to be bearish. Now in the pit, what we have been seeing in the pit is basically larger locals showing their hand in terms of just kind of trading sideways. Again, as I mentioned, that mentality that we have down there where they basically buy the dip and they sell the rip. And that's been basically the big trade that these locals have been putting on. Paper has still been pretty much long. Again, in the pit outright contracts, paper has been long, and locals have been just kind of trading this range. Again, keep in mind, as I mentioned, we are in the 5th business day of the month, so we are starting to see roll activity into the SEP. Again, over like 13,000 SEPs traded yesterday in the pit. So that's kind of interesting here in the outrights. Okay, let's talk about the options pit. So what's been happening in the options pit? Man, I see a lot of upside. They've been pegging this upside activity here big time here. Again, we've been talking about just in the options. Okay, so we see the Augie calls, right? So we see over 15,000 110 calls trade, over 10,000 112 calls trade. So that's huge activity on the strike levels. Again, I got 110s and 112s trading over 10,000 times. We take a quick look also at the 105 call, over 5,000 times in the pit. So you can see they buy these upside calls. And look at the puts. So, okay, the put side. They share up the downside, don't get me wrong. They're massaging some risk around. They're putting in their stops. We have the 101 put 4,000 times, the 100 put 7,000 times, the 95 put 5,000 times. That's nowhere near the 12,000 and 11,000 and 7,000s that we were trading on the call side. So there still is a lot of money on the upside. All right, guys, so let's talk about some levels here as we just kind of talked about our multiple market divergence. Basically a risk-on, risk-off sentiment and our supply-demand differential. Let's now take a look at these levels here from the pit session from yesterday. So, again, as I mentioned, we have some highs up at 103.57 in the pit session. Once again, 103.57 high. Your low, 102.27. Closing settlement number, 103.12. And we find ourselves trading around 103 this morning, so we're right near yesterday's settle. Today, your daily pivot is going to be 103 even, or you can call it 102.99. So I'm calling it, once again, 102.99, or you can even call it 103 even. So resistance up above, 103.71, 104.29, and 105.59. Support down below. I got for you guys 102.41, 101.69, and 139. So as I mentioned, open interest here has been just falling just a bit, basically showing that the shorts are getting squeezed out. You can see now, overall, not a huge range yesterday, but kind of a break-even range for gamma scalpers. And you can see that implied volatility sitting at about 26%, still rather firm. And this is exactly where we needed to trade higher. If the vol starts to trade a little bit lower, then we can see prices probably trade a little bit lower. So different correlation with volatility, as we have to see what the market always calls for. All right, guys, natural gas here. We're going to talk about these levels now for the pit session. Again, I got 376.40 as your pit session high. Pit session low, 368.88. Closing settlement number, 374.20. Alrighty, guys, your daily pivot today here in the natural gas is going to be 373.10 with some resistance above here at 377.40, 380.70, and 388.30. Support down below, I have 369.80, 365.50, and 357.90. So again, in your natural gas, as we have now your levels up there, we want to be using those levels to trade, but we could expect a little bit of a slow grind to the upside. Again, I just want to kind of show you guys how we broke out of the trading range that we've been in for the last week or two. So look, we break out of the trading range. This is all yesterday's trade right here. As you can see here now, we have yesterday's trade, and we pop up above the range. Now, either it's going to be pretty simple here. We get back into the range, right? Sell below the 370s, we get back into our range, and we can trade all the way down back to 352. Now, is that likely? I don't think so. I think that we could possibly see 370, pull back slightly, maybe to 366.60. This might be a really nice place to start to buy pullbacks here, as we are looking at warmer than expected temperatures across the United States. Very bullish factor, okay? Chantel down into the Gulf of Mexico, that could disturb some natural gas production. So that's Tropical Storm Chantel. So that's another bullish factor. So we have a couple things that could drive prices higher with natural gas. So I would kind of be looking to buy the pullbacks there in that market. And keep in mind, it's going to be a very slow type of grind, very stylish type of trading until we get those inventory numbers on Thursday. So I really would be careful with natural gas. I'd be trading within the range, buying pullbacks, being careful, and just waiting for our news. All right, so as I mentioned here, guys, on that crude, we want to be looking to buy the dip. So again, we have that 102.57, we have that 102.13, and we have the 101.46, 44 level, whatever one you want to be looking at. Those are going to be some nice levels of support that we want to be buying. So keep that in mind. Along with some resistance above, again, we have the previous high day. Well, we have the pit session high at 103.57. Then we have the 103.80, as JJ was mentioning, and then the 104.12. That's our ultimate upside target. And then if we can get above that, then we're definitely buying pullbacks here. So again, ladies and gentlemen, to me, it could be possible that we could break that 104.12 and trade higher. As I mentioned in the pit, they placed all that money in that 105, 110, and 112 call, over 10,000 of each contract. So that's huge in terms of just the upside and where they're targeting it. So again, pit doesn't lie, and watch the dollar index trade lower, watch volatility, and we could definitely have a nice trading day here. Keep in mind, API numbers are released tonight as well, so I want you guys to remember about that. APIs are tonight, and I'll give you guys those numbers later on in the commentary. And also, when I see you guys tomorrow morning, you guys will get those API numbers. Again, remember the reaction from last week, so they're important numbers. Again, this is about it for me. Again, I'm going to throw back over to JJ over in Los Angeles, as we are the first people on the trading floor every single morning, and we're getting ready for this gold pit session open in 20 minutes and the crude pit session open in just about an hour.
Marty, thank you so much, my friend. Thank you so much, as always, for coming in and joining us. It sounds like we've got another day filled with a little bit of waiting up front, but we've got a great opportunity in front of us, guys. You know what's going to happen. You know this volatility is going to come back in. We don't know when it's going to come, but it will come. Be on the lookout today. We get that JOLTS report at 10 o'clock. Not a lot of major news in the calendar today, but again, we know that eventually here something's going to come, so be ready for it. The market moves in three ways: moves up, moves down, moves sideways, so be ready for all three scenarios. As always, each morning we have our blog updated, our blog over at Crude Oil Squawk. You can grab a link to that blog and grab today's video update. You can grab all the charts for today, and of course you can get a link to that right on our blog homepage at sidewaysmarkets.com. So head over to Sideways Markets. In the upper left corner, you'll see the button there for the Crude Oil Squawk and Prep. Check us out on Sideways Markets. Follow that blog that we always get all the updates to our charts each morning. And I want to thank you for coming out and joining us today. Have a great Tuesday morning. Thank you to Marty over at Traders Audio. He's Marty at tradersaudio.com. I'm JJ at SchoolOfTrade.com. Don't forget to log in and take a look at his broadcast at 8:50 a.m. this morning. Have a great day, everybody. We're on a 23-hour and 30-minute break. We'll see you back here for a hump day edition of the crude oil squat. From the screen to the floor, my name is JJ. See you guys tomorrow. Remember to learn it so you can earn it. Adios, amigos. Bye-bye for now.